Good evening and welcome to this live Ask Me Anything About Property Investing with myself, Saj Hussain. These are weekly lives I do on Monday at 8:30 p.m. on various different platforms on Facebook, YouTube, LinkedIn, Instagram, and Twitter. I'm trying to remember what the other platform was. So really this is an opportunity for you to ask me any questions around property investing. If there's anything I can do to help you, put the questions in the comment section, whatever platform you're watching on, and I'll do my very best to answer that question for you. So today I'm in my home office. I'm not in my usual other office, and I don't have anybody else helping me this evening, social distancing. So I've got a number of screens around. So hopefully I'll be able to do this on my own this evening and get your questions answered. So if there's anything that you want to talk about with regards to investing in property, put it in the comment section below and I'll do my very best to answer those questions for you. I can see some of the questions on here, and hopefully we'll be able to get those answered for you. And what I'll do is I'll start with the questions that I have from last week that I left unanswered, do those first, and then we'll take it from there. So first question is from David Duke on Instagram, sorry, on LinkedIn even, is how do you start without funding? I think David's question is referring about how do you get started in property without any money. Well, look, you always need some money around you when you're talking about investing in property. Property is one of the probably the most expensive assets that anybody will purchase in their life. So you need some money around that, whether it's transactional fees alone, i.e. solicitors costs, etc., that you need to be able to get that deal done. There's very creative ways you can do that. For example, lease options, etc., where you control the property rather than owning it, and still be able to benefit from the from controlling that property. But ultimately, you need some money around you, and I think the important thing to think about is, when we talk about using other people's money and getting started in property, which is one of the ways that essentially I started, I built my property portfolio, my property business, is thinking about how can you be investable? How can you be somebody that somebody else would want to invest their hard-earned money into or invest with? So thinking about what value do you bring to somebody else? So it might be that you're very good at sourcing deals. It could be that you're a great project manager to oversee renovations. Whatever it might be, you think about what value are you going to bring to somebody else, and why would they want to invest their hard-earned cash with you to ultimately help you and they benefit from as well. So it's focusing on becoming investable, as I said. The other thing you could be thinking about, David, if you're looking to start with no money at all in terms of, or very little cash, is thinking about services within the property sector rather than buying property itself. So for instance, sourcing is the most common one, where you get out there, you get very good at finding property investment opportunities, and then you package those up and you offer them to somebody else, and then you charge a fee for that. That's also something I was doing a number of years ago, and that really helped in honing my skills in terms of negotiating and finding those deals, the marketing skills around finding those deals and packaging them up and building relationships with investors by offering the deals to them. Now, I wasn't purchasing the property, but I was overseeing the purchase of that property for somebody else, and then charging a fee for that. And then it transitioned from there for me to partnering with other people. So rather than just sourcing the deal and charging a fee for that, what I did, I transitioned to partnering with somebody who would fund the deal and would share the profit on that particular deal rather than just charging a fee. Again, these are a few examples of how you can get started with very little money of your own within property. Now, if you're starting with some funds, you're definitely going to be in a better place. There's no doubt about that. You'll be able to get further within your property journey if you've got some funds around you. But if you've got no funds, it's still possible. But it's not easy. So you gotta be pretty determined and pretty focused and pretty driven to want to make it work. So David, hopefully that answers your question there. So next question I have is, I'm just having a look, see if we've got some questions coming up. So next question I have is from Facebook, which is Akil Mahmood. And his question is, hi Saj, do you feel there is a recession approaching? If so, would you keep buying properties or reserve funds? Great question. I definitely think there is a recession coming. I was just on a group call with my mentoring students just before this session, and that's one of the things we were talking about, the signs and the indicators of when the market's going to start changing. So right now we're at a point in the marketplace where a coronavirus has had a huge impact on our lives already, in terms of what we can do, our work, going out and about, and this is going to start having a deeper effect and ultimately start affecting the economy and, of course, property transactions. And when it starts affecting property transactions as well, then that means from what we're doing in terms of strategies and things will also evolve. So how do we know we're in a recession? Well, really, it's just it's 2 months of consistent shrinking of economy of the GDP, and when that happens, then officially we're in a recession. But essentially, what is a recession? A recession is people are not spending money. People are not spending as much money, and that's the thing that we're looking for and how that affects the property market in terms of what we're doing. So I think I've got another question about auctions in a moment, so I'll talk about auctions separately because I think they're a good indicator. But when the market starts to slow, you start seeing prices dropping, you start seeing properties sticking, you start seeing deals falling out of bed. And then when you're having conversations with the agents, you can see not many people are coming through the door. Or literally right now, when we're unable to even go out and view properties, all these things are going to cause the market to shrink and it'll be recession. So I think the question isn't about, are we going to have a recession? It's a case of how deep is that recession going to be and how long is it going to go for? I think those are the key questions, and those are the things that we need to be thinking about. And right now, we don't know. We don't know how long this is going to go on for, and we don't know how deep and difficult this recession could possibly be. But here's the thing you should be doing right now, steadying your ship. So what do I mean by that? What I mean is making sure everything you're already doing at the moment, whether you're in property already or in the early stages, you've been doing this for many years, just make sure you've got everything solid. Make sure you understand implications of deals that you're doing right now in terms of if there's change in the market, have a plan B and a plan C ready. And just be on top of things like making sure your rents that you're collecting, conversation with tenants, with what's going on, just to make sure you're on a fairly solid platform. I think that's key. That's the first thing that we should be doing. And then the next stage, we'll be looking for opportunities as the market changes. So Akil's question around whether there'll be a recession, I'm quite sure there will be. It's just how long that recession will last and how deep that recession will become, and how much of an impact that will have on the housing sector. The deeper the recession is, the more house prices will fall and the slower the market will get. So I know there'll be new and different types of opportunities. Like if you've been following my stuff for any period of time, you know I'll talk about in Birmingham, for example, it's really difficult to find below market value property, BMV property, or discounted property, as some people refer to it as. You know, it's difficult because there's a huge number of buyers right now. They're pushing the prices up, so there's very little scope for BMV. However, when the market changes, like it inevitably will in the coming weeks and months, more opportunities will arise for BNB. So this is where you can adapt your strategy, and it's really important that you are agile and nimble enough to adapt as the market changes. You'll find that you'll start seeing opportunities that you hadn't seen for some time. So as I was saying just earlier on, I was speaking to my inner circle mentees, and one of the things we were talking about is recession back in 2008. Around that time, what was going on, how the market was changing, what opportunities had come about. Now, each time a recession happens, is different things that trigger that recession. It isn't exactly the same thing that happened previously. So it isn't going to be a replica of what happened previously, but we can take some learnings from some of the things that happened back in 2008, 2009, around that period of time, and apply some of those to the market right now. So, Akila, hopefully that answers your question. So Shakil's just commenting on Facebook that the coming recession will be massive. That's my opinion based on all the things I've learned in recent years. Pending collapse will bring opportunities for BNB. Absolutely, Shakil. Shakil's been in the finance market a very, very long time. So I'm sure seen a number of recessions during that time. So I've got a question on Facebook on this screen. So I'm just going to read it off here. This one's just come through from Hussain Chowdhury. And Hassan's question is, if my company is giving a property on lease to another company, who would then manage and let it to a local housing association, what type of landlord insurance do I need? That's a great question. I'm probably not going to be able to answer that fully for you. But in terms of insurance, you need to check with the broker. The broker needs to fully understand what the arrangement is. Because sometimes when I've looked at these types of arrangements or some that we have on our properties, and we look to try and get the insurance sorted out on those, sometimes we'll get a quote back, and then when we drill down and actually look at it, it hasn't quite been quoted correctly. So it's really important that the broker understands what you're trying to do, because here what you've got you as the owner of the property that has an interest in the property. Then you've issued a lease to somebody else who is now acting as the landlord on that property. So effectively they've got some interest in that property, and then they in turn actually have an arrangement with somebody else who's providing the tenants that are in that property. So you need to look at the relationship between each of those levels. Make sure your broker fully understands what it is that you're trying to do, so that they can quote the insurance correctly for you. And if you're the owner of the property, then you can always ask to try and push that onto the tenant, so they cover the cost of it for you, as we call it an insuring FRI lease. And my mind's gone blank right now. So when you're getting the tenant to insure the property for you as well. And if you're somebody that's taking on the property as a lease, you want to try and obviously get the landlord to pay that for you, depending on which side of the fence that you're sitting on. So I've got a question from Cam Ali on Facebook. He's saying, what's your secret to this subject? Sad, essentially, I think he's talking about raising finance and no capital. And just as I was speaking about earlier on, when I was answering David's question, it's about being investable. It's about finding good quality opportunities, making sure you've got an opportunity for somebody to make money with you, not taking huge risks, doing modest risks and making sure it's a good return for you, a good return for your investor, and doing what you say you're going to do. Make sure you're consistent in that, you build a reputation and allow people to get to know you, like you, and trust you, so that they can do business with you. I'd say there's no big secret, but those are things I think have had a huge impact in terms of my ability to be able to literally go out and raise millions and millions of pounds of private investor cash. That's how I've gone about doing that, and that's how I share that. In fact, on the 1st of April, I'll be doing a live workshop specifically on this topic, a masterclass on raising money, so that in this market right now, as the opportunities arise, you're in a very good place to be able to benefit from that. If that's something you want to know more about, just ping me a message and I can send you the details for that. That'll be on the 1st of April. So let's jump on to the next question, which came through on YouTube, and it is from Vital. What's a minimum profit margin you'll take? So it's two questions. And the other one is, do you recommend Birmingham, any big city, or should I go for a cheaper area up north? So it's two separate questions. Let's take those separately. So the first one is about what's a minimum profit margin I'll take. Well, ultimately, it depends on what the deal is. Sometimes that could be a cash amount. Sometimes it could be a percentage. It just depends how the deal is. If I'm working with somebody else's money in that particular deal, I've got to look at how am I going to produce a sufficient return for them to invest with me, and also for me to produce a good return for the time and effort I've got to put it and the risk that I'm taking, because ultimately I've got to deliver on that particular deal. So all those factors need to be taken into consideration. When we're doing developments, it's a little bit easier to look at it. We're doing it in a slightly different way. So our developments tend to be in the region of 30% gross profit off the GDV, at the end value of that site. 30% of that is ultimately what we're looking for as a profit. 25 to 30% tends to be the range. But when it comes to individual property transactions or HMOs, it really does depend on the deal. I don't have a hard set in stone type of rule. I look at the investors I'm working with on that particular deal. What is it that they want? And then make sure I can put together a win-win deal that works for us both. Your other question about Birmingham, whether do I recommend Birmingham? I am a big fan of Birmingham. I was born here. I literally love the place. I think this is a great place to be investing. I think for many years, Birmingham suffered in terms of lack of growth, particularly when you look at probably pre-2014. Pre-2014, I think Birmingham had quite a hard time. very limited, modest growth that was happening year on year in terms of rises of property values. And then we saw, Manchester, I think, literally leapfrogged Birmingham in terms of growth and explosion of the property market. But I think more recently it's really been catching up. We've been benefiting from that. Price rise has been really strong. So I think Birmingham's an absolutely great place to invest. It's a huge city. There's lots of pockets. It's understanding the market and understanding the pockets. But that's the thing, regardless of where you are. So your other question is whether it's Birmingham or big city or anywhere else. Well, really it depends on the strategy you're doing ultimately. So, for example, in an ordinary market, if you're looking for 20% below market value, it's unlikely you're going to find that in a booming city like Birmingham during ordinary times. But if you went up to the northwest, you could probably find those type of deals a lot easier. So it does depend on the strategy that you follow, because the city you can't look at in isolation. It needs to be looked at with the type of strategy you want to use, the kind of funds you're looking to get involved in those projects, how much cash you're looking to kind of bring into these transactions, and ultimately, whether you're building a portfolio, you're building to sell, what is it that you're looking to try and do? So yes, I'm a big fan of Birmingham. I think a huge number of strategies work out. I think it's a great place. Clearly, we're in uncertain times right now with coronavirus and everything else. We're not quite sure which way the market will turn. I suspect that we're going to head for a recession right now. But depending on the strategy you're looking at, I think it's important to tie that in with the location you're thinking about as well to make sure that it works. So let me see if I've got any other questions over here. So I've got a question on YouTube from Danny. The question is, do you have any tips or resources you recommend for people undergoing their first renovation project and who have little understanding about construction? So if you're doing your very first construction project, Danny, you're just getting started, it's really important that you have people around you that you can turn to who have that experience and really de-risk the project for you. So if you think about the horror stories you hear about renovations and refurbs and flipping deals that go wrong, often it's the owner of the property or the investor, the developer. Their lack of understanding means they get taken advantage of in terms of whether it's the particular tradesperson on that deal or other people or expertise that you're relying on, but not having a full grasp of how things work is how you'll end up getting your fingers burned. So what you want to do is involve somebody who's done these type of projects before, and that might be somebody you're paying as a fee. So for example, somebody might say, is it a project manager? Well, it could be a project manager, but you're probably going to have to pay quite a lot of money in terms of the amount that you'll need to pay the project manager compared to your first basic renovation that you might be doing. So it's the knowledge is what's going to reduce your risk in making that deal work for you, making sure the renovation goes smoothly, and it's the understanding of what trades need to go in first. For example, if you're managing the whole thing, what things you need to look out for. The issue with renovating a house versus, say, building a house is when you're renovating, there's so many unforeseens. You go around the first time you look at that property, you think, okay, right, I can see I need to redo the electrics, they're a bit grotty, the windows need replacing. Yeah, I can see those things. But what you can't see is when you lift the floorboards, if there's rotten joists underneath. When you start taking the wallpaper off, is the plaster all going to come tumbling down as well because it's so old and knackered? These are kind of things that you can't see. And an older property will have many of these types of hidden problems that not that somebody's kept them from you, that they can't necessarily see until they start taking that property apart, until they start unraveling it. And that's when you start seeing some of the problems and the challenges you face. That's why I think if you're doing your first deal, it's really important that you've got somebody with you who've got the experience to de-risk it for you and make sure you're not making mistakes. And if you're working with a contractor, a builder who's going to do the whole job for you, is again making sure you've got somebody who can look to see as another pair of eyes to make sure that builder's doing things in the way it needs to be done and pricing the way it needs to be done, and that you're paying the right amount of money. We were talking about people getting their fingers burnt on projects and messing up. And sometimes that's because the builder disappears. The builder might have disappeared because they paid them all the money up front. The builder's got no reason to hang around anymore. They've had the money and they've done a portion of the work. And well, I'm not saying all builders are like this, but these are the kind of stories that you'll hear. People get taken advantage of because they don't really understand or know what they're doing. So I think the best piece of advice I can give you there, Danny, really is to make sure you've got somebody with you who understands it, that you can get some guidance and support from. It could be another pair of eyes and ears for you. Even if you have to pay them, it's worth it. You're going to pay for the renovation anyway. It's better to pay that little bit extra to get the extra help and support to make sure the deal's done properly. And if you're using project managers on site, we use project managers, some of our projects. The project manager should save you more money than they will cost you. On a small project, it tends not to be viable. On bigger projects, absolutely, what you pay the project manager should be saving you way more than that in terms of things that you might have got caught out on otherwise. So hopefully you found that useful. Danny, if you've got a question you would like me to answer this evening for you, put it in the comment section on whatever platform you're watching on. And look, this is a lonely thing to be doing. Producing a video like this, staring at a camera and a couple of screens with no real feedback. So let me know if you're finding this useful, if you find these lives useful, what kind of things you'd like me to try and cover, whether you even want me to carry on doing these. I've been doing these for probably about nearly 6 months now, I think. And look, I'm happy to carry on if you find them useful, but just give me some feedback. Hit the like button, put a comment in, tell me you find them useful, and I'll look to carry on to continue to serve you in this way and help you get further faster in your property investing journey. The other thing, last week we did a virtual property meeting. We went online to do that, and we talked about the budget, the changes, although sometimes people right now are thinking about budget, what budget? There's so many other things going on. But the budget that happened last week, the impact that it has for us as property investors, if you want some more information on that, Ahmed, my accountant, my property tax accountant, did a great presentation, deciphered all the things that are happening in the budget and things we need to be aware of there. You can get that video by just going to my website, which is sajhussain.com/budget, /March budget. So that's sajhussain.com/March budget. So I'll see if I can pop that in here as we're speaking. I haven't done this before this way, so let's make sure it works. If you just click on the link as well, let me know if that's working okay. And then we'll jump on to the next question in just a moment. So the next question I have, this was on LinkedIn. This is one of the questions from last week that was left over that was unanswered, which is from Omar Mehmet. He said, "Hi Saj, what impact do you see coronavirus will have on the up and coming auctions in the next few weeks? Most auctions are moving to online auctions, but still carrying them out. Do you see prices of property dropping over the next 6 months due to a drop in mind? Are you buying or selling at the moment?" So great question. So I touched on auctions earlier on, that I'll come back to it. Now, when a market's changing very quickly, as it is right now, there's new bits of information coming out all the time in terms of the government announcing various things, and everything's very fast moving, and that creates a huge amount of uncertainty, which creates fear. And ultimately what happens is people take a step back and do nothing because they're fearful, they're unsure what's happening and what's going on in the market. And if we look to see how that impacts property, often what will happen, property prices might start dropping. So transactions that are happening right now might be at a lower price than they were, say, last month. But when are we actually going to get that data? We get that data from the land registry, and it's usually 2 or 3 months behind the actual event. So what that means is, by the time we're looking at the data, that data is already out of date. So one early indication for us to get us a sense for where the market's going is auctions and the number of lots that are selling in an auction room. So whether it's a virtual auction or whether it's a live in-person auction, virtual auctions, I suspect that's where most of them will shift to right now, with obviously everything going on and social distancing and not being in crowded places. the only way I can see them going right now is online, and it'll be interesting to see how they pan out. I think it's a good format. I think it could work, the online auction method. But right now, what we're talking about is what will happen in the market. Are people going to continue to buy? Are people going to take a step back and stop buying? My personal view is what will happen is this month and next month, you'll see much, much lower results for the auctions, i.e. they'll sell fewer items that they've got in their lots. Fewer of the lots will actually sell, and also they'll be achieving lower prices than they had been previously, because the reason they were achieving great prices before, because there's this huge demand, everyone's trying to buy property prices are going through the roof, auctioneers are using these great tricks like really low guide prices, everybody gets interested, drives the price up, and the price achieved in the auction rooms are absolutely crazy. So when the market slows, auctions give us fast results. They tell us straight away, less people came to the auction today, less people were bidding on property prices were achieving lower than what they were expecting. Some of the stocks weren't even meeting reserve prices and not being sold. A number of lots were left at the end of the auction unsold. All these are the indicators that actually the market is slowing, and I suspect that's what we're going to see. Already we've started to see signs. A friend of mine is selling a property in auction this week, actually, just looking at the date, and the number of people that have been out viewing it has been a lot less than what we were expecting would come out to have a look at that particular property. So not a great sign, but I think the market is shrinking in the sense that prices will start shrinking. There will be fewer buyers. At the moment, it's too early. We're right at the beginning of the pandemic that's happening in the UK. We're just in the first couple of weeks of just experiencing all this change, all these government announcements, potential lockdown, and everything that's happening is moving really quickly. We're right at the beginning at the moment, so it hasn't quite translated into property prices just yet, but it won't be long. We'll start seeing an impact in the property market very, very quickly. And as I said earlier on, it's really important that you first steady the ship. You make sure you're on solid ground, solid foundations that you're building a business on. Everything's tight, and then you start looking at the opportunities that are going to start appearing, which may have been very different from some of the opportunities that you were looking at before. So Omar, look, I hope that helps. I think it's interesting times. We're certainly in uncharted territory, somewhere we've not been before. So I've still got some of the questions popping up now. These are the ones I'll look at next week, next Monday when we start. I'll start with those questions. So just to wrap up now, say thank you so much for spending your time here with me. Let me know if you're finding these videos useful. I look forward to carry on making them for you on Monday at 8:30 across the various different platforms as YouTube, Facebook, LinkedIn, Instagram, and Twitter. Put your question in the comment section and I'll do my best to answer those for you. As I mentioned earlier on, if you want a breakdown of the budget and the impact and the opportunities that exist within the budget that just happened about a week ago, then make sure you visit the website, which is hussain.com/March budget, and you can watch that video there. And on the 1st of April, I'll be doing an evening masterclass. I'll be focusing on sharing with you some of the skills and things I've learned about raising money from property investors, so you can really benefit from some of the opportunities that are going to come along in the coming months. If you want to know more about that, just ping me a message on whichever platform you're watching, and I look forward to seeing you again soon. Thank you very much.